Welcome to another episode of the Weekly Crypto Check-In, recorded on May the 1st, 2024. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, good, Robert. It's been a busy week, but weather's beautiful here in Atlanta today.
Yes, it definitely feels like a late spring day here. It's getting warm earlier in the day, and the humidity has found its way to Georgia. So,
yeah. Well, what's your takeaway from the last week in crypto?
The market has not been exciting. It's been a lot of sideways or down, right? And admittedly, it's kind of taking a breather, which has been great. Kind of gives you the ability to focus on other things that you might need to be doing. So,
yeah,
I am. This news this week, maybe some may find it more interesting because it's more varied, and others may think it's less interesting because we're talking less about ETFs, if that's your flavor that you prefer. So,
well, it wouldn't be crypto if we didn't talk ETFs and lawsuits and regulations. So we've got our healthy dose of that. But starting out the third straight week of BTC ETF outflows.
Yes, collectively as a group, they finally have. It seems like the market is been fulfilled in the sense that, like, there's not tons of demand right now, and it's healthy. It needed to take a break. It was on a crazy tear out of the gate, and kind of our second bullet point there kind of shows just how crazy it was. Is the IBIT, so this means the iShares ETF IBIT. Ended its consecutive daily streak of inflows at 71 straight days. I think on the all-time longest list, it is like 10th or 11th, something like that, which is pretty incredible. And those are all-time, not out of the gate. It is certainly the longest out of the gate at launch. So
yeah,
I guess if BlackRock needed another trophy to hang in the office, they could make themselves a trophy about this one. So
yeah, it seems like a little bit of cooling off in the market over the last week or two. Maybe a lot of the folks that initially, I want to say, rushed out to get exposure to Bitcoin, but that really were eager to buy right when the ETFs were approved, got their exposure. Now it'll be interesting to see, the ETF analysts that that follow this space say that it's not unusual for all these ETFs to see outflows. So I don't think it's a sign of the market's changing stance of digital assets, crypto, etc. I think it's more the initial adoption has happened, and now that sort of bell curve, right? I think we're moving up that curve, bigger market, bigger dollars, but it's going to take longer for those people to move.
Yeah, right before these all launched in early January, I remember posting on LinkedIn about my thesis on what was going to happen was there was going to be a rush in, and then it would become less popular. People would start saying, "See, nobody wants these things." I admittedly, the initial rush in took a lot longer to finish than I had expected. But I think that we're in that "see, nobody wants it" stage. You definitely are seeing that pop up a little bit on crypto Twitter in a few places from more of the Bitcoin bears. But it's not necessarily on our bullet point list. But obviously, we talked about last week. Hong Kong is approving their Ethereum Bitcoin ETFs to be trading soon, and since we last spoke, it was Australia announced their by year end is going to have. So there's certainly more jurisdictions coming online. Obviously, there's less capital in all those markets than we might see in the U.S. market, but it just I think it just slowly builds a base that this will be built off of.
It's going to be traded, all over the world. Well, let's talk about our required weekly legal check-in here. This time, the SEC looks to be not going after XRP or Ripple, but they've been investigating ETH for some time. It came out here in the past week.
It came out last week. It's been over a year. Apparently, the investigation's been going on, and it doesn't sound like that's that far out of the normal. Like the SEC seems to take a while to build their case and collect whatever evidence they can collect. So it's just immediately it's more of the same. This SEC seems almost hell-bent on trying to find anything and everything that they think may be wrong with this industry. And some of it, obviously, there's certainly been bad actors, but there's a lot of good actors that are kind of getting swept up in this, this, I wouldn't call it a witch hunt, but something like that. It's just unfortunate. And then, if we kind of skip down a few bullet points, we have the opposite of this happening. So Consensus is a company that is Ethereum focused, co-founded by one of the founders of Ethereum, sued the SEC this last week, saying we want you to say that Ethereum is not a security. I don't think that was the right tactic, or not the one I would have taken. In the middle of an investigation, you decide to sue them. Maybe it's proactive because they know it's coming, that they're going to get sued. I don't know. Obviously, probably more will come out that may help that make more sense. But it's admittedly more of the same in crypto. And it's exhausting talking about all this lawsuit stuff. So,
well, we had this conversation offline like earlier this week where, I come at the space with, fair amount of experience in alternative assets and non-traditional assets and just financial services in general. And, it just appears sometimes from the outside looking in when you're, looking at the entire space from sort of the macro that, it could be the reporting, it could be the media, it could be the headlines, but it just feels like a lot of time the narrative of, disruptive technology, transformational change, a lot of the stuff that you hear about technology disrupting industry, it seems like a lot of that gets lost in crypto and digital assets because there's so much wrangling happening in terms of, litigation, regulation. And maybe that's just because the financial assets, like unlike AI, where maybe it's more of a societal discussion, less of a discussion about people investing, losing money. The moment you start talking about crypto, it introduces things like meme coins, which we're going to get to. Now, all of a sudden, we're talking dollars and cents. And as a result, a lot of good actors, some bad actors, regulation, discussion, litigation. It's unfortunate that, so much of the good gets swept up in, like you said, these ongoing lawsuits. And maybe that's just the nature of it because of the plumbing and the infrastructure and the foundational stuff that's getting laid down.
Yeah. I mean, there's a lot there. And there's a lot of layers to this, right? It's, you have the projects doing their work, whether they're on a certain chain or they're starting their own blockchains. And then you have the communities that form around each one of them. And then you end up, admittedly, with this tribalism that happens in crypto. And it's really between the communities in a public forum like Twitter that are fighting back and forth. Because, in many of these, I would say it's simple-minded views, they are saying how, one coin's going to rule them all. This coin's going to, rule the world. And that's just not realistic. And honestly, it's so short-sighted. So you have that, and then you have the lawsuits, and then that gets mixed in, and social media definitely doesn't help any of this stuff. So it's just a lot of noise. So it's
I mean, it's not like the Cola Wars, right? Where you have two dominant players, Pepsi and Coke, or the airlines, where there's like 12 major airlines or how many ever there are, right? So it's like they don't use the public forum or the public square of X or Twitter to sort of battle and hash it out. Maybe the other thing that's different is that in crypto and digital assets, like the individual has a voice, right? The person that has a blog or has a podcast or doing what we doing, that's different, right? You're just not going to find that often in these more entrenched institutional spaces, and that in some cases for a lot of people is a good thing, right? But it does lead to a lot of bad information, a lot of tribalism, a lot of infighting, and sort of frankly for investors, a lot of noise.
Right. And, I think one big differentiating factor between the Cola Wars or whatever you want it to kind of replacing it, contrasting that with crypto, is people in crypto are making an investment. I mean, your investment in, I guess you could go buy Coke or Pepsi stock.
Yeah.
It doesn't feel the same, right? I mean, like, admittedly, there's a tinge of gambling when you're buying a crypto. At least the way that most of these people are approaching their investment decisions, and or lack thereof of decisions, is pure bets. So it just, I I foresee a future, or I hope to see a future, where we kind of get past this, and it's more, you feel like it's more like an equities type market, where a lot of that tribalism goes away, and it's just purely based upon what the companies, quote unquote, or projects are doing versus all the other crap that's happening.
Yeah, I'd say one last point I would make on this is, when we were all stuck at home during COVID and people were not out and about, and people were sitting around on their computers. There was a lot of stimulus money. There was a lot of this day trading, and you saw these meme stocks really take off, and you saw it just coincided with Robinhood launched, and the whole trading just culture got huge, right? And that happened in the early 2000s or late 90s during the .com. But it really exploded during COVID, and we saw a lot of people, and they even made a movie, right? A Hollywood movie about it. Was Seth Rogen? I think. He played one of these day traders, and I bring all that up because that's the closest, I think, analogy to what you're seeing now with some of the investors that are piling into, and I know we have a headline later, into these meme coins. It almost feels like retail investors are looking to make that super quick buck, and there's literally very little, if any, diligence, homework, research, whatever you want to call it, done. They don't care. They don't care that you care. They just are looking to,
make a quick buck.
Flip a dollar, take out 3, and let somebody else deal with it. And I think because of the nature of this market, for people that want to play it that way, it is so far away from the institutional research approach, right? That good, bad, or indifferent. But that's where we're at in terms of the market evolution, and so people can't go flip in and out of private equity. They can't go flip in and out of real estate. They can't go flip in and out. I mean, they could, I guess, theoretically play the stock market, but even that is not as wide open as these meme coins.
And there's regulation on that. All of a sudden, if you do too much trading, you get labeled as a day trader, and there's restrictions in your account. That is part of the SEC and the different regulators kind of putting their paws on things and making some sense of it. Not to say that could necessarily happen to crypto, in that sense, but there definitely needs to be some guardrails put around some of this craziness.
Speaking of guardrails, the next headline, the DTCC is announced they're no longer allowing crypto as collateral. Maybe we should explain what the DTCC is.
Yes, so that is an organization that does the settlement effectively of equity in type transactions.
Yeah, transaction settlement effectively behind the scenes. You're making sure accounts are matched up, and they transact in just about every type of major security.
There's so the news headline here, and I'll follow it up with something that's not necessarily exactly about this bullet point, but they're not allowing the collateral to be crypto to be used as collateral. So that's more likely specific to ETFs. I don't know of any place that you can get a traditional, say, margin loan against crypto in, say, a brokerage account. You certainly can do that in offshore crypto exchanges, but not necessarily onshore. So I don't know. It just seems odd that they're doing this now. Maybe there's a reason why they're doing it. It wasn't clear if there is beyond just their headline, and it literally was effective almost immediately. So this is already in effect at this point. So the part that I'll follow up with this on is there's, as part of my research around the commercial use of crypto, the DTC comes up quite frequently about they're certainly looking at tokenization and just what crypto can do to help streamline. Their business could be revolutionized overnight, and it feels like they're trying to be ahead of the curve, not traditionally trying to play catch up. So, it's we talked about it last week, potentially the NYSE allowing 24/7 trading. I think the DTCC would need to be on board with that. That certainly is probably multiple people need to get together to allow that to happen. And, tokenization would certainly allow the plumbing to kind of be there for some of that to happen. So,
yeah, you sort of put yourself in the shoes of these executives and the teams running these organizations that have the potential to embrace the technology, and it almost as if there's like a recognition that the technology could work, but the change involved, like the process of making the change is so substantial from how things have historically been done. All the systems, all the people, all the operations, technology that's either got to get rewired, get replaced, be disrupted is so significant. It's no surprise that a lot of this stuff is moving slower than people maybe like you and I on the inside are saying, but the tech's there. This could be done.
Right. Yeah, I think that there's, you may have a scenario where the executives say a DTCC are be like, yes, we're all in crypto, let's go forward. But then obviously they're not the ones going to be implementing it, right? They're just the ones making the decision. So like the teams behind the scenes doing it have to pick that mandate up and run with it. And admittedly, crypto is a young person's game. So what are the teams behind these companies? Where are they at on the age spectrum? Maybe harder or easier for some teams to pick it up, and that's just one facet to look at it on. There's the contractual pieces of the current systems, and admittedly, they need to do it, and people never notice, because if they notice, that means something went wrong. In all likelihood, and that would be much bigger of an issue for the markets as a whole, not just crypto. So
sure. Yep.
So let's jump back to our meme coin thing you mentioned earlier. You brought this headline up to me yesterday. It's the meme. You're right. The meme coin market is dominating crypto market as a whole. Not Bitcoin, but just generally out in alts. It's the one that makes the news, the biggest changes in valuations and all that kind of stuff. And it's appears to be pretty easy to launch one of these things.
Yeah, for me, that, like I said, this kind of goes back to sort of the the Wild West, I guess. The cynic or critic of crypto is that you have a lot of the meme coins out there, whether it's named after a pet or it's named after some celebrity. The reality is because of no regulation, because it's still possible for basically a technology company to spin up a company and allow you for less than $2 or $3 a JPEG and a couple of other check boxes to launch your own, coin. There has to be zero liquidity, meaning you don't have to put up any capital. It can just start trading. It's it almost defies sort of belief. But I guess when you step back and you say, okay, this is, there's 10,000 of these, tokens out there. Now you start to see why. And I think what seems to be maybe even the bigger conversation and narrative around this is that this is where a lot of, this is where some retail investors are electing to participate and play.
Right.
And
if they like to gamble
or gamble, like whatever you call the activity. But the idea is, you're trying to find that kind of proverbial diamond in the rough. It's like going to Vegas, bet it all on black, and just see where the roulette table sort of ends up. And I think when you look at investment from the standpoint of utility, it's it's one of those things where it's like the furthest away from the conversation around a lot of these meme coins. So it's just kind of where we are. I don't know if you probably have more history following these market cycles in crypto. Have meme coins always had their moment where they've sort of run up like this and there's been frenzy?
it hasn't been obviously since the beginning of crypto, at least from my recollection. It really started with Doge. And that was in 2020 when everyone was locked up at home. Doge existed before then, but it never really had, I hate to call this traction, but or awareness in the market is maybe a better way to describe it. And it certainly took off then. And obviously the peak of Doge was, Doge frenzy was when Elon went on Saturday Night Live and, talked about it. People thought he was going to say he was going to use Doge at SpaceX and all these crazy things. Obviously didn't happen, but just generally the meme coin market. I like that it gets people interested in crypto, but that's where my fondness of it stops. To me, it's a huge distraction, and it gives the space in my opinion, a bad look. Like there are a bunch of gamblers, a bunch of kids gambling on stupid stuff, and there's so much more promise in stuff going on in crypto than I think what the meme coin tends to let the average investor that's peering into the market look like. So.
Yeah. It's for me, it's when you think about like financial advisors and those people that are starting to put client assets into Bitcoin, I think that there's, clearly different segments of the market. My perception, and I could be wrong, it's not based on facts or any particular data, but the folks that are participating in a lot of these meme coins and they're buying, it's retail, it's individuals. They've got their, experience in crypto. They know how to exchange and trade and buy and do in and out. These are not people going to an advisor to ask them, how to do this.
No.
So I guess if they lose all their money, my takeaway is that's on you, man. Like,
yeah,
if you put money in this stuff and you then expect the government to bail you out, like that's where I have like a hard stop. I'm sorry,
Yeah, meme coins aren't going to show up in any serious place that Wall Street touches. The closest that they may ever get to would be Robinhood, and I'm pretty sure that Robinhood allows you to buy and sell Doge, so they're doing some of it. So it's obviously they're catering to what they think their market is there, but I can't wait to close the crypto chapter of meme coins and kind of move forward. So.
Well, the other thing that I, wanted to ask you about that I saw some headlines around in the last week or so was just the conversation around how, AI has captured so much attention, is getting significant investment from at least the major tech firms. And you see that when they come out and report quarterly numbers. How much is that entire movement of AI and just the amount of talent, capital, etc., moving into the space? How much is that overshadowing a lot of the stuff you see happening in crypto? It's more of a question.
Yeah, I don't think it's like such a black and white thing. I think that obviously you had the crypto VC frenzy that was 2020 and 2021, probably in the beginning of 2022, coming out of the summer of DeFi, right? Like that was, if you said you're doing anything with crypto, you immediately could raise money with probably a one-slide pitch deck. Obviously, I think we're probably a year into that version of AI right now. Like if any company, if you look at like their new product releases, they just use the word AI all over the place, and half of them probably aren't even using AI. They're just using it to try to be quick with marketing. But markets go in cycles. This is more of a pendulum. It's swung really hard one way. I believe that crypto is here long term. AI is probably here long term as well. But it's this, I look forward to. I know we're going to be doing a fireside
webinar
chat type situation, with a VC in crypto, and just kind of get his take on it, right? I mean, like he's in it day to day, and the idea that it's not like I can't imagine he's not writing checks at all right now. Maybe it's slower. If he's not writing checks right now, either his fund is already committed or he may not be doing his job. So we'll see. So do you have a take on this? I'm curious.
Yeah. I mean, I think that a lot of I had a show yesterday with a VC, and we were talking about fintech more broad. Okay, but his take was that a lot of VCs will go into areas. In this case, this VC is a fintech VC, so they're very focused in fintech. They don't do digital assets and they don't do crypto, They specifically look for kind of SaaS businesses and specialty finance, like fintech lending businesses. So pretty narrow lens. And what he saw happen in their world, and I think you could make the same argument happened in crypto and probably is happening in AI, is VCs that are a little bit more general will put capital to work in a specific area that helps, number one, tell a story to LPs. If you're out raising money, you're getting into these hot startups. So, 2, 3, 4 years ago, it was, oh, we're investing in digital assets, Web3, DeFi, crypto. Now that's moved to AI. Do they have a specific domain expertise? Do they have an edge? How long have they been doing it? Remains to be seen. But here's what happened with fintech. A lot of the companies that went in that weren't really looking at these SaaS businesses that were lending as lending businesses, they were trying to put valuations on them as SaaS businesses. They woke up to the reality that when the Fed raised rates and we went from a 0% interest rate environment to now, right, we're at 7-8% on, a lot of different consumer loans. Like, those models blew up, and they're the SaaS valuation and the valuation on just a brick and mortar traditional lending business, if you look at the public comps, they're totally different. And I would say that a lot of these fintech businesses are not going to get checks from some of these VCs, because these VCs are going to say, well, the exit multiple is not going to be there. It doesn't make sense. The math doesn't work. I could see some of that same type of thinking happening in crypto and also in AI in a different way. But I think that, just not to pile on the VC space, but it's just like you said, things move in a pendulum. And so people are going to move to where the opportunity is. And it feels like everybody's moved out of crypto, Web3, DeFi, except the folks that are really pretty hardcore. They're probably going to be the ones that are going to make money. And those sort of spectator types have moved into other areas like AI and robotics and, the next hot area for different reasons.
Yeah. So, it's the challenge with any market that VCs invest in, or businesses that VCs invest in more specifically, is there may come a time, like you're saying, where VCs don't find them interesting anymore, or they can't justify putting more capital in. Doesn't mean it's a bad business. It may need to be kind of right-sized, but at the same time, it's
just not going to grow at the
they're not going to grow, and they're likely going out of business, right? I mean, that's the reality for those. Sadly, it's just as an aside, that's why I love to see bootstrap businesses so much, because you think about revenue, you think about all the important things up front. You don't worry about hiring people initially and trying to spend a bunch of money.
I mean, the narrative in VC up until a few years ago was, grow. Now it's, get to profitability, right size your business, cash flow, etc. So, all right. Lastly, CZ sentenced to 4 months.
Yeah, he the prosecutors had asked for I believe 12 to 18 months, something like that, and his side, they asked for 6 months of
house arrest or
house arrest or something like that. Basically, no jail time. So he ended up getting 4 months. Admittedly, I'm surprised. I would have never guessed it was less than 12 months. But this happened, I believe, late last week, and to me, we can officially say we're closing the chapter on this part of crypto. Like, SBF's already in jail for a long period of time, not long enough in my opinion, but then CZ kind of got the opposite treatment. He probably worked with investigators a lot more than Sam did, and didn't be lying the way through the process. So.
Right. And he being the founder of Binance, which was a major exchange and a competitor to FTX before its implosion. Now he's just the chairman or founder. He can't run the company, so he's effectively,
he can't, But I recently learned that his wife is a high level exec there. So it's kind of like,
okay,
I don't know. I'm just, again, kind of ignoring it, ready to move on.
Like you said,
close
chapter closing.
Chapter closing. So.
Well, a lot of good headlines. Again, lots of interesting things happening as always. It's a good check-in.
Yep. Well, thanks for joining us on this episode of the Weekly Crypto Check-In. If you want to stay updated on future episodes, you can find us in any podcast player by searching Tea Time Crypto Capital or Weekly Crypto Check-In. Take care.
Take care.